If you've ever felt chained to your screen, stressed out by market noise, or exhausted from chasing trades all day, this book is going to feel like a breath of fresh air. It's not about trading harder, it's about trading smarter. The Lazy Trader teaches you how to trade less, stress less, and still win more. Inside these pages, you'll discover why hustle culture is destroying most traders, how doing nothing can actually be one of your greatest trading edges, and how to build a simple, rule-based system that fits your lifestyle, not the other way around. This isn't just another trading book filled with complicated strategies and endless indicators. It's a guide to freedom. Freedom of time, freedom of mind, and freedom from the chaos of overtrading. Whether you're a full-time trader or just getting started, the lessons here will show you how to create a trading routine that's calm, consistent, and profitable. So grab your headphones, settle in, and let's explore how to become a truly lazy trader. And why that might just be the smartest decision you'll ever make for your financial future. Chapter 1. Breaking the Hustle Myth. Let's start with a painful truth most traders won't admit. Trading can feel like a full-time fight. You wake up early, check multiple charts, scroll through Twitter alerts, watch every tick of price movement, and keep CNBC running in the background. You feel like you have to hustle, because if you miss a move, you think you're missing money. And yet, after all that hard work, what's the usual result? Stress, burnout, and yes, often a blown account. This is where the Lazy Trader hits you with its first and most important lesson. Hustling harder does not make you a better trader. In fact, in trading, doing more often leads to doing worse. Unlike most areas of life where hard work equals more reward, the markets don't care how many hours you stare at your screen. The market rewards clarity, patience, and precision, not constant activity. Think about it. Have you ever taken too many trades in a single day, only to see your profits wiped out by one impulsive decision? That's not bad luck. That's overtrading, caused by the pressure to do something. This chapter is all about letting go of that toxic pressure. The author reframes the word lazy. Here, lazy doesn't mean careless or unmotivated. It means efficient, calm, and focused. A lazy trader doesn't chase every opportunity. They're like a sniper, sitting still, waiting for the perfect shot, knowing they only need a few great trades to make their week or even their month. They understand that trading isn't a game of constant action. It's a game of waiting. Many traders secretly believe that the more they watch the markets, the more control they have. But that constant monitoring just floods your brain with noise, increases emotional stress, and makes you more likely to act on impulse. The lazy trader breaks free from this trap. They build routines, plan their trades ahead of time, and then step away until it's time to execute. The author encourages you to measure success differently. Stop measuring your day by how many trades you took. Instead, measure it by how well you followed your plan. Did you stay patient? Did you wait for high probability setups? Did you avoid impulsive entries? If the answer is yes, then that's a winning day, even if you didn't place a single trade. It's an invitation to trade in a way that feels lighter, calmer, and more sustainable. To stop letting the market control your emotions and start trading on your own terms. To move away from stress and anxiety and toward peace of mind and freedom. It's no longer about sitting in front of your computer for 8 hours hoping to catch every move. It's about becoming selective, intentional, and strategic. It's about trading less, but earning more. Most importantly, it's about building a trading style that gives you your life back instead of taking it away. This is the foundation for everything that follows in the book. Once you stop believing in the hustle myth, you're ready to learn the systems, habits, and routines that will make you a truly lazy trader, one who works less, stresses less, and earns more. Chapter 2. Trade less, win more. The power of doing nothing. Doing nothing is often the most profitable thing you can do. For many traders, this is one of the hardest lessons to learn. Our instincts tell us that more action should lead to more results. If we're not in a trade, we feel like we're missing out. But the truth is, constantly being in the market is one of the fastest ways to lose money. The book paints a powerful picture. A patient trader is like a sniper, calm, focused, hidden, waiting for the perfect target. They don't shoot at everything that moves. They wait for the highest probability shot, because they know that one clean hit can change the game. On the other hand, overtraders are like machine gunners spraying bullets everywhere, hoping something will land. Sure, they hit a few targets, but they waste a lot of ammunition in the process, and eventually they run out of bullets. Overtrading doesn't just hurt your account, it drains your mind. Every trade you take costs mental energy. When you're constantly in and out of trades, you get emotionally exhausted. You start breaking rules, taking setups that don't meet your criteria, and forcing trades just to feel productive. That's when mistakes happen, big ones. Your job as a trader is not to take as many trades as possible. Your job is to wait for the few setups that truly give you an edge. Think of it like fishing. You don't jump in the water and chase the fish. You sit patiently, line in the water until the right one bites. The book shares real examples of traders who cut their number of trades by 70 to 80% and saw their win rate and profits soar. They traded less, but they made more. Doing nothing at first feels uncomfortable. It goes against every instinct. You sit there watching price move and feel like you're missing out. But here's the thing. Missing trades is part of the plan. You're not supposed to catch every move. You're supposed to catch the right moves. When you stop taking random trades, your stress level drops. You stop feeling like you're in a fight with the market all day. You become calmer, more focused, and more confident. Every trade you take feels deliberate, not desperate. The key lesson here is simple but powerful. Less is more. If there's no setup, you don't trade. If the market is choppy and unclear, you sit on your hands. If you've hit your daily or weekly profit goal, you stop trading. This is what separates professionals from amateurs, the ability to wait. You start to feel a sense of relief. You realize you don't have to trade every day. You don't have to be glued to the charts. You don't have to catch every move. Your job is to be patient, to protect your capital, and to strike only when the odds are in your favor. This one mental shift, from constant activity to strategic inactivity, is a game changer. It frees your mind, protects your energy, and sets you on the path to becoming a more consistent, confident, and profitable trader. Chapter 3: Preparation, Execution, and Shutdown, the three-part routine. If you've ever sat at your screen all day, jumping in and out of random trades, you know how mentally draining trading can be. It feels chaotic, no plan, no structure, just reacting to whatever price does. This chapter introduces a simple yet powerful solution. A three-part routine that takes the stress and randomness out of trading. The routine is made up of 3 clear steps: preparation, execution, and shutdown. Let's start with preparation. Preparation is where the work really begins, and it's what separates disciplined traders from gamblers. This is your pre-market warm-up. Before the market opens, you take time to review the bigger picture. You check key levels, mark areas of support and resistance, and prepare your watch list for the day. You visualize what setups might appear and how you will respond if they do. This isn't just about drawing lines on a chart, it's about mentally stepping into the role of a professional trader. By the time the market opens, you already know what you're looking for, and you're ready to act with confidence. Then comes execution, and this is where most traders get in trouble. Execution is not about taking every possible trade, it's about taking only the trades that meet your criteria. The author recommends limiting your execution window to just 60 to 90 minutes, ideally during peak market hours. Why? Because shorter, focused sessions keep you sharp. When you sit for too long, fatigue sets in, and that's when you start making emotional decisions. During execution, you do one thing and one thing only: follow your plan. No guessing, no chasing, no FOMO. If your setup appears, you execute. If it doesn't, you wait. Finally, we come to shutdown, the most overlooked part of trading. Shutdown is about closing the loop. When your session is done, you don't just walk away. You review the trades you took, log them in your journal, and reflect on what went well and what could improve. This helps you spot patterns in your behavior and refine your strategy over time. Once that's done, you shut down your trading platform and step away. This last step is crucial because it prevents you from sitting in front of charts all day, taking random trades out of boredom or frustration. This 3-part routine turns trading into a structured habit instead of an emotional roller coaster. It takes the guesswork out of your day and replaces it with discipline. You know exactly when you'll prepare, when you'll trade, and when you'll stop. This structure not only helps you stay consistent, but also protects your mental energy so you can perform at your best. Following this cycle also teaches you one of the most important skills in trading: how to walk away. Many traders stay glued to their screens, watching every tick because they feel like they need to be in control. But the truth is, the more time you spend watching, the more likely you are to take bad trades. By following this routine, you get your time back. You're no longer chained to your desk. You have a process that gives you clarity, keeps your emotions in check, and allows you to live your life outside of trading. Trading no longer has to be chaotic. You don't have to sit for 8 hours hoping to catch every move. You can trade in a focused, professional way, prepare, execute, and then shut it all down. This simple habit is what turns amateurs into consistent, confident traders. Chapter 4. Kill the noise. Clear the clutter, focus on your edge. If you've ever opened your trading platform with 3 Discord chats buzzing, Twitter blowing up with hot trade alerts, and 5 indicators flashing conflicting signals, you know how overwhelming trading can feel. The modern trader has more information than ever before, and that's exactly the problem. This chapter is all about clearing the clutter and taking back control of your mind. The author explains that most traders lose not because they lack intelligence, but because they're drowning in too much data. The endless stream of news headlines, analyst opinions, social media posts, and YouTube gurus creates a kind of mental fog. You start second-guessing your setups, hesitating on entries, and jumping into trades that weren't part of your plan just because someone online said, "This is the next big move." Radical simplification. Step 1 is cleaning up your charts. Many traders overload their charts with so many indicators that price action, the only thing that really matters, gets buried under a mess of lines, oscillators, and signals. The lazy trader strips their chart down to the essentials. Clean charts create a clean mind. Step 2 is curating your information sources. The book encourages you to unfollow the noisemakers who create fear and FOMO. You don't need to be in 10 different chat rooms or follow dozens of analysts. If news isn't critical to your setup, you can skip it entirely. If you do follow news, choose 1 or 2 reliable sources and ignore the rest. Step 3 is committing to your setup. This might be the hardest part emotionally because it means tuning out the crowd. When everyone else is screaming buy and your setup says stay flat, you trust your edge and do nothing. When your setup gives a signal, you take the trade confidently without hesitation. This discipline builds self-trust, and that is one of the most powerful tools a trader can have. The author also talks about the emotional benefits of killing the noise. When you cut out the clutter, your stress level drops. You stop feeling like you have to monitor every tick or react to every headline. You begin to trade with clarity and confidence. Your focus narrows, and trading becomes calmer and more controlled. Audit your entire trading environment, from your chart setup to your news feeds to your social media habits. If something doesn't serve your strategy or your mindset, get rid of it. Every distraction you remove is like taking weight off your shoulders. Trading no longer feels chaotic. It feels clean and focused. You have fewer inputs, but you trust them more. You stop reacting emotionally and start acting intentionally. This is what the author means by focusing on your edge. Know what works for you, ignore everything else, and execute with calm precision. The big takeaway is simple. You don't need more information. You need more clarity. By killing the noise, you reclaim your mental energy, strengthen your confidence, and finally create the space to trade like a professional. Chapter 5. The 2-Hour Trading Day, Structure for Success. This chapter is where the book truly earns its title, The Lazy Trader. Here, the author makes a bold claim. You don't need to sit in front of your screen all day to be a successful trader. In fact, the less time you spend watching the market, the better your results can be. All you need is 2 focused hours a day. And that's more than enough to review, trade, and grow your account over time. The idea sounds almost too good to be true at first, especially if you've been told that trading requires constant attention. Many traders believe that the more time they spend glued to the charts, the more opportunities they will catch, and therefore, the more money they will make. But the book flips this logic on its head. Spending all day watching price doesn't lead to better decisions. It leads to fatigue, impulsive trades, and eventually, costly mistakes. The 2-hour trading day is built around 3 simple blocks of time: preparation, execution, and shutdown. You spend the first 30 to 45 minutes preparing, reviewing your watch list, marking key levels, and planning potential setups. This time is calm, structured, and free from emotional decisions because the market hasn't started pulling you in yet. Then comes your execution window, which is usually about 60 to 90 minutes during the most active market session. This is your time to act. You focus on executing only the setups you planned earlier. If a setup meets your criteria, you take it confidently. If no trade appears, you simply wait or even walk away knowing that doing nothing is still following the plan. Finally, you spend 10 to 15 minutes on shutdown. This is where you log your trades, review your decisions, and reflect on what went well and what didn't. Once you've done that, you close your trading platform and step away from the screen. This last step is crucial because it prevents overtrading and protects your mental energy. The author shares inspiring examples of traders who adopted this routine and saw remarkable results. Busy professionals, even people with full-time jobs, were able to double their accounts simply by committing to 2 hours of focused trading per day. They didn't need to quit their jobs or spend 8 hours watching charts. They just needed a clear plan, a focused window of time, and the discipline to stick to it. When you limit your trading to a specific time window, you stop feeling chained to the market. You no longer feel the urge to check price every 5 minutes. Your stress level drops and trading stops dominating your life. Instead of feeling like a job you can never clock out of, trading becomes just one part of your day, leaving you free to focus on family, hobbies, and personal growth. Perhaps the most powerful lesson here is that more time does not equal more success. In fact, the opposite is often true. The more time you spend staring at the market, the more likely you are to make emotional, impulsive decisions that hurt your account. By condensing your trading into a short, focused session, you stay sharp, disciplined, and emotionally balanced. Chapter 6: Emotional Automation Outsmarting Your Own Mind. This chapter dives into the very core of why most traders fail, and it's not because they lack knowledge, skill, or strategy. It's because they lose the battle with their own emotions. Fear, greed, hope, impatience. These are the silent killers of trading accounts. You can have the most powerful strategy in the world, but if you can't control yourself in the heat of the moment, your plan will fall apart. Fear makes you hesitate on good setups or close trades too early. Greed pushes you to risk too much or hold losers too long, hoping they'll turn around. Impatience makes you jump into trades that don't meet your criteria, just to feel like you're doing something. And hope, that dangerous little voice, keeps you holding losing trades, waiting for a miracle that rarely comes. The author introduces the concept of emotional automation, building systems and rules that make decisions for you, so your feelings don't get a vote. The first step is using stop-loss orders, always placed in advance, never adjusted once a trade is live. This single action removes one of the biggest temptations traders face: the urge to just move the stop a little further and give the market more room. With a hard stop in place, your risk is defined, and you can let the trade play out without constant fear. Next comes fixed risk per trade. The lazy trader risks a small, predetermined percentage of their account, often just 1% or less, on every trade. This ensures that no single losing trade can wreck their account or their emotions. It's much easier to stay calm and follow your plan when you know a loss will only take a small, manageable bite out of your capital. The author also emphasizes building if-then rules into your plan. For example, if I lose 2 trades in a row, then I stop trading for the day. If my profit target is hit, then I shut down my platform and walk away. These rules prevent emotional spirals, like revenge trading after a loss or overtrading after a big win. Another powerful piece of emotional automation is learning when to step away. After a tough loss or a streak of losing trades, the best thing you can do is hit pause. Physically step away from the screen, take a walk, breathe, reset your mind. By doing this, you avoid digging yourself into a deeper hole and protect your mental capital. Some traders resist it because they like the thrill of making decisions on the fly, but that thrill is often what destroys their consistency. By automating your process, you're not giving up control. You're actually taking full control of your trading future. The result of emotional automation is transformative. Trading stops feeling like gambling and starts feeling like running a business. You no longer ride the emotional highs and lows of every single trade. Wins feel good, losses sting a little, but neither one throws you off your game. You simply execute the plan, log the result, and move on. Chapter 7. The beauty of boring profits, consistency over excitement. We live in a world that loves instant gratification. Social media is filled with traders flaunting screenshots of 10x gains, overnight wins, and account flipped in 1 week success stories. It's exciting, it's flashy, and it's almost always unsustainable. The author explains that those viral jackpot trades you see online are usually fueled by luck, not skill. Sure, someone might turn $1,000 into $20,000 overnight, but what you don't see is how many times they blew up accounts to get there. What you don't see is the emotional roller coaster that comes with risking everything on one big trade. That style of trading might look glamorous, but it's closer to gambling than it is to a business. Real wealth, the book reminds us, comes from boring consistency. Small, repeatable wins stacked over time. The author compares this to a casino's business model. Casinos don't rely on one big bet to make their profits. They have a small edge, and they let that edge play out thousands of times. Over time, those tiny edges compound into massive, predictable profits. Lazy traders operate the same way. They're not chasing a home run on every trade. They're not obsessed with doubling their account in a month. Instead, they focus on taking high-probability trades, managing their risk, and repeating the process over and over. They care less about the outcome of any single trade and more about the outcome of the next 100 trades. This shift in perspective is a game changer. When you stop trying to hit a jackpot, your stress level drops dramatically. You no longer feel the pressure to make it big in one trade. You stop over-leveraging, you stop taking reckless risks, and you start thinking long-term. Suddenly, trading becomes calm and manageable. To the psychological benefits of boring trading. When your results are consistent, your confidence grows. You start to trust your system. You stop second-guessing yourself. Each trade becomes just another data point in a much bigger picture. The book even provides some math to illustrate how powerful boring profits can be. A trader who makes just 1 to 2% per week can double their account within a year without taking extreme risks. That's the beauty of compounding. Slow, steady growth eventually snowballs into life-changing results. Of course, the challenge is emotional. Boring can feel boring. It's not as exciting as hitting a huge win and bragging about it online. But this chapter encourages you to fall in love with boring. Boring means repeatable. Boring means scalable. Boring means sustainable. The author shares stories of traders who shifted from chasing excitement to focusing on consistency and how their entire trading life transformed. They went from blowing accounts and riding emotional highs and lows to quietly, steadily growing their wealth month after month. You don't need adrenaline. You need results. And the results that truly last come from boring, disciplined, consistent execution. Chapter 8. Build a lazy trading system, your plug-and-play plan. The author doesn't just talk about mindset. Now they give you the blueprint to actually create your own trading system. And here's the best part. It's not meant to be complicated. In fact, a good lazy trading system is deliberately simple, rule-based, and designed to fit into your life without consuming it. The first step is understanding what makes a system effective. Your system should answer 3 questions: when to get in, when to get out, and how much to risk. If you don't have clear answers to those questions, you're not really trading, you're guessing. The book explains that a lazy trading system should have clear entry rules that are objective, not based on gut feeling. For example, it might say, enter long when price closes above the 20-day moving average and RSI is above 50. That's a rule. You either meet the criteria or you don't. There's no gray area, no debating with yourself in the heat of the moment. Next come the exit rules. This is where many traders struggle. They either exit too early out of fear or hold on too long, hoping for a bigger move. A good lazy trading system defines exactly when you will exit, whether it's at a fixed profit target, a trailing stop, or a technical level on the chart. This keeps your decisions consistent regardless of how you're feeling in the moment. Risk management is the heart of the system. The author stresses that you should never risk more than a small, fixed percentage of your account on any trade, often 1% or less. This allows you to survive losing streaks without blowing up your account and keeps your emotions in check when trades go against you. The book even shares an example of a very simple strategy, a moving average crossover system that only needs to be checked once per day. The rules are straightforward. If the short-term moving average crosses above the long-term moving average, go long. If it crosses back below, exit. That's it. No constant chart watching, no overthinking, just a simple rule-based system that takes a few minutes a day to execute. But here's the key lesson. Your system has to fit you. It should match your schedule, your risk tolerance, and your personality. If you have a full-time job, you might prefer a swing trading system you check once or twice a day. If you're more hands-on, you might choose a day trading system with defined hours. The point is to build a system that supports your lifestyle instead of clashing with it. Once you've built your system, the next step is backtesting. This means running your rules on historical data to see how they would have performed. Backtesting gives you confidence in your edge and allows you to fine-tune your rules before risking real money. When you see that your system works over dozens or even hundreds of trades, it becomes much easier to stick with it during inevitable losing streaks. Finally, the book encourages you to automate parts of your system whenever possible. This can be as simple as setting stop-loss and take-profit orders in advance so you're not tempted to close trades too early or too late. Some traders even use software to automatically execute their signals. The more you can take emotion out of the process, the smoother your results will be. You have a system that you trust, rules you can follow, and the confidence that you don't need to be chained to your screen all day to be successful. This is the heart of the lazy trader approach. Build a simple, reliable system that does the heavy lifting for you, so you can spend less time trading and more time living. Chapter 9, Dealing with Drawdowns, Staying Calm When Losing. If there's one thing every trader must face, it's this. Losing streaks are inevitable. No strategy wins 100% of the time. There will be days, sometimes weeks, when nothing seems to work. And here's where most traders fail. Not because of the losses themselves, but because of how they respond to them. This chapter is all about mastering that response and learning how to stay calm when the market seems to be working against you. The author starts by reminding us that even professional traders with decades of experience go through drawdowns. The difference between pros and amateurs is that pros expect them. They've planned for them. They know that losing is part of the business, not a sign that they are bad traders. The first key to surviving a drawdown is risk management. If you're risking too much per trade, a string of losses can wipe out a huge portion of your account and your confidence along with it. That's why the lazy trader keeps risks small, usually 1% or less per trade. At that level, even a 10-trade losing streak is just a 10% drawdown, which is manageable and recoverable. Small risk keeps you calm because you know no single trade can destroy you. The second key is sticking to your rules. When losses pile up, the temptation is to abandon your plan, double your position size, and try to make it all back quickly. This is how accounts get blown. The author calls this revenge trading, emotional, desperate trading that almost always leads to bigger losses. Instead, the lazy trader keeps following their system, trusting that their edge will play out over time. Another powerful tool the book suggests is journaling. Writing down your trades and emotions during a losing streak helps you process what's happening and spot patterns. You may notice that some of the losses were caused by breaking rules. That's a fixable problem. Or you may see that your trades met all your criteria and simply didn't work out, which means your system is fine and you just need to stay the course. Journaling takes the sting out of losses because it gives you data instead of drama. The author also emphasizes the importance of mental reset rituals. After a tough loss or a bad day, step away from the charts. Go for a walk, hit the gym, Do something that resets your mind and reminds you that trading is just one part of your life. This keeps you from spiraling into emotional decision-making and allows you to return with a clear head. Drawdowns are temporary. They are not permanent states. They are simply periods where your edge is going through normal variance. The worst thing you can do is quit right before your system starts working again. The pros know this, and that's why they stay consistent even when it hurts. Chapter 10. When Not to Trade, Mastering Strategic Patience. One of the most counterintuitive lessons in trading is that sometimes the smartest decision you can make is to do absolutely nothing. This chapter is about mastering that skill, the ability to stay out of the market when conditions aren't right. It may sound simple, but it's one of the hardest habits for traders to develop because sitting still often feels like missing out. The author reminds us that professional traders treat no trade days as part of their plan, not as wasted opportunities. They understand that trading without a setup isn't trading, it's gambling. And gambling is not how you build a long-term profitable trading career. The first scenario where you should sit out is when your setup isn't there. If the market isn't giving you a clear signal, there is no reason to force a trade. Taking a trade just because you feel like something might happen is a recipe for emotional decision-making. Your edge only exists when your rules are met. The second scenario is when market conditions are unclear or unfavorable. The author explains that some days the market is clean and trending, and other days it's choppy and indecisive. Trading in unclear conditions often leads to frustration, stopped-out trades, and revenge trading. Recognizing those conditions early and stepping aside is a superpower that keeps you from bleeding capital. Equally important is knowing when not to trade based on your emotional state. If you are tired, angry, distracted, or coming off a big loss, you are much more likely to make impulsive mistakes. The lazy trader has the discipline to pause trading until they are back in the right mindset. This might mean taking the rest of the day off or even a few days to reset mentally. Interestingly, the book also advises taking breaks after big wins. Winning feels amazing, but it can lead to overconfidence. Overconfidence makes traders think they can't lose, which leads to oversized positions and sloppy trades. By stepping away after a big win, you protect yourself from giving it all back in a moment of overexcitement. Also reframes what a no-trade day really means. It's not a missed opportunity, it's a victory for your discipline. Every time you choose not to trade when the conditions aren't right, you are protecting your capital and preserving your mental energy. The lazy trader celebrates those days because they know staying flat is sometimes the most profitable decision of all. The author shares stories of traders who turned their performance around simply by learning to skip low-quality trades. Their win rate went up, their stress level went down, and their accounts started growing consistently. You start to see patience as a weapon, not a weakness. You realize that part of being a great trader is knowing when to stay out, when to sit on your hands, and when to wait for the market to come to you. This level of discipline turns trading from a chaotic, emotional grind into a calm, controlled process. Strategic patience is what separates the amateurs from the professionals. Amateurs feel the need to always be in a trade. Professionals know that no position is a position, and often the best one. Chapter 11. Money Management for Freedom. Protect capital first. Profits are important, of course, but they only come if you survive long enough to see them. And the key to survival is rock-solid money management. The author starts by reminding us that risk management is more than just numbers on a spreadsheet. It's your psychological safety net. When you know exactly how much you stand to lose on a trade, you stay calm. You no longer watch every tick in panic because you know the worst-case scenario before you even click buy or sell. One of the most important tools is position sizing. This is where you decide how many shares, lots, or contracts to trade based on a fixed percentage of your account. Most lazy traders risk no more than 1% of their account per trade. That means even a 10-trade losing streak only costs 10% of the account. Painful, yes, but far from catastrophic. Compare that to the traders who risk 10% per trade. Just a few losses in a row and their account is wiped out. Next comes stop-loss placement. This isn't just about protecting your account. It's about protecting your emotions. A well-placed stop loss frees you from staring at the screen in fear, wondering if the market is about to turn. You've already made the decision. If price hits that level, you're out. No questions asked. This level of discipline removes the temptation to hope a losing trade will turn around. The author also emphasizes thinking in terms of risk-to-reward ratios rather than just profit potential. A solid system might aim for trades that risk $1 to make $2 or $3. Over time, this math works in your favor, even if you only win half your trades. This approach transforms trading from emotional guesswork into a business of probabilities. When your risk is small and your plan is clear, you trade with confidence. You no longer feel the pressure to win every trade because you know you can survive losing streaks. That sense of security allows you to think clearly, stick to your system, and make better decisions. The book shares stories of traders who turned their careers around simply by reducing their risk. They stopped taking oversized positions, stopped blowing up accounts, and started growing slowly but steadily. The emotional shift was just as powerful as the financial one. Trading stopped feeling like gambling and started feeling like running a professional business. Staying in the game is more important than winning today. A single trade will never make your career, but one bad trade with too much risk can end it. The lazy trader focuses on surviving first and profiting second, because survival guarantees they will have another chance to trade tomorrow and the day after that. Chapter 12, Living the Lazy Trader Life, Trading as a Lifestyle. This final chapter is where everything you've learned so far comes together into one big, inspiring picture. Trading, at its best, isn't meant to feel like a stressful job that chains you to your desk from sunrise to sunset. It's meant to give you freedom. Freedom of time, freedom of mind, and freedom to live life on your own terms. The author reminds us that most traders start their journey dreaming about freedom. They picture themselves working from anywhere in the world, setting their own schedule, and having more time to enjoy life. But somewhere along the way, many traders lose sight of that dream. They become trapped by their screens, checking charts day and night, and feeling anxious every time the market moves. Trading stops feeling like freedom and starts feeling like another job. Only this one never lets you clock out. The lazy trader approach is about getting that freedom back. It's about building a routine that allows trading to support your life, not take over your life. You pick your trading window, maybe 2 focused hours a day, and you stick to it. You prepare, execute, and shut down, just like you learned earlier in the book. When your trading session ends, you walk away knowing that you've done your job. You let the market do what it's going to do, and you go live your life. The chapter paints a vivid picture of what this lifestyle looks like. You're no longer glued to every price tick. You're no longer reacting emotionally to every piece of news. Instead, you have a simple, rule-based system that runs quietly in the background. Some parts might even be automated, taking trades or alerting you when your setup appears. You spend your days focused on what matters most: family, health, personal passions, knowing that trading is working for you, not against you. It also highlights the mental and emotional benefits of living this way. When trading no longer consumes your thoughts 24/7, your stress level drops dramatically. You start sleeping better. Your confidence grows because you're no longer making desperate, impulsive decisions. Trading becomes calm, predictable, and repeatable. The author reminds you that the real reward of trading isn't just money, it's peace of mind. It's waking up without anxiety. It's knowing that your financial future is secure because you have a process that works. It's having the freedom to say yes to opportunities outside the market because your life no longer revolves around staring at charts. The lazy trader lifestyle is about alignment. Your trading goals and your life goals stop fighting each other and start working together. You no longer feel like you have to sacrifice time, relationships, or your mental health to be successful. Instead, trading becomes the tool that helps you create the life you've always imagined. And that's a wrap, friends. By now, you've seen how trading less can actually lead to winning more, and how building a simple, stress-free system can completely transform your trading journey. If you take just one lesson from today's video, let it be this: trading doesn't have to control your life. With the right approach, patience, and discipline, you can trade with ease, confidence, and peace of mind. Thanks so much for watching. If you found this video helpful, don't forget to like, share, and subscribe. Hit the bell icon so you never miss insights that can make your trading life smarter, calmer, and more profitable. Until next time, stay relaxed, stay disciplined, and trade wisely.